Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing. We're going to talk about PayPal stock. Now, just so you know, I do believe that this is a good stock, a good company for a long-term investment. And based off of the analysis that I just performed, the base case for in a year's time is a price target of $290 a share. I am going to show you how I came up with that number in this video, and I am also going to give you a low end and a high end for the next 12 months and the next 2 years. So if you're interested in PayPal as an investment, then this is a great video for you, and please consider hitting that subscribe button, ringing that bell, and smashing that like button. So here are the numbers, and here is the approach that we're taking. Because PayPal is a growth stock, a DCF is not a good way to analyze the stock and to come up with a fair price. Because as you can see, the fair value of the company based off a discounted cash flow, it just doesn't work because it's a growth stock. And the fair value based on that method is around $145 a share, which is incorrect. The better way to analyze PayPal and to come up with a price target is through a multiple. The one we're doing on today's video is the price to sales multiple. Now the numbers we are using for the low end are 7, the base is 9 because that's the 5-year average price to sales multiple for PayPal, and the high end is 12 because this year alone PayPal was trading well above 12 on the price to sales multiple. So given that multiple and the assumptions that we have made for revenue growth over the next couple of years, the price targets we get are $290 for the base case in 1 year's time and $351 for the base case in 2 years' time. We're using the forward multiple. So when we look at 2022 forward looking, we're actually projecting what the revenue is going to be in 2023. And that's how we're going to get that forward multiple in 2022. But the share price of $290 would occur in 2022. The same concept would apply to the 2023 forward looking multiple. Now on this video, we're going to show you how I came up with the revenues that I'm using for the foundation of this calculation. We're going to go over the assumptions I made. But if you also want to get access to the spreadsheet, you can do so by joining the Patreon. It would also give you access to a Discord server, a private Discord server of over 500 investors, and a weekly stock report where I go over the top picks for each given week. It's $5 a month, and the link to the Patreon is provided down below. Now for the majority of my research and my analysis, I use WEBULL because it's extremely powerful. You can pull all of the financial statements, you can see what analysts are rating the stocks, and you can also take a look at the charts and a lot more through WEBULL. So it's a one-stop shop for all of your trading and investing needs. Right now, WEBULL is currently running a stellar promotion that can get you up to $2,300 by just putting $1 down. The way the promotion works, and it's an exclusive promotion with the link down below, is if you sign up with WEBULL, you will get 1 free stock worth up to $300. No money down. As soon as you make a deposit, does not matter how much, you will get another free stock worth up to $2,000. So essentially, by putting $1 down, you can get $2,300 in return, and it's also a great brokerage. So it's a win-win situation. A link is provided down below. That stellar promotion is only going to last till the end of the month. Now before we head over to the computer and do all of our analysis, something has to be said for PayPal. You are not going to get instant gratification when you put money into PayPal. Right now, the technicals are bearish, and I don't know if the stock is done dropping. This might be trying to catch a falling knife. And that is something as traders you would wait to see some kind of confirmation. But as an investor, you're basing your investment off of the value of the company. And you can buy some stock now saying that this is a good price. I don't care what the technicals have to say because I'm confident that this company is going to be worth more than it is today in the future, and by a good amount that it's worth taking on the risk. Now, my preferred way of investing in stocks that are in downtrends, they are undervalued, but the technicals are not good, is through dollar cost averaging, DCA. If you are interested in investing in PayPal, but we know that the charts are still bearish, then you can buy a third of what you want to invest right now. If it continues to drop, you still have buying power. If as soon as you buy, it starts rebounding, well, at least you're in the stock and you have a position that you can build later on. It's a win-win in my personal opinion. It is the preferred way to invest in companies that are undervalued but are still weak on a technical standpoint. All right, if we take a look at the charts for PayPal, the charts are just god awful. We are well below all of the major moving averages, and we are in a free fall right now. Now, in addition to that, we also have this Fibonacci retracement from the low to the high in the 1 year. And if we retrace that 50%, that puts you at a share price of $199.50, just around $200 a share. We broke that and we are heading lower. Now, it's my personal opinion that I think a lot of traders are in PayPal or were in PayPal, and they thought that $200 was going to hold. As soon as we saw that $200 did not hold, I think we saw a lot of selling pressure of traders exiting their position, because now PayPal doesn't look like it's going to be a quick swing, a quick return on your money. This is going to be more of a longer term investment based off valuation and future growth prospects. At least that's my personal opinion in PayPal. Now, when we performed our analysis, you can see that there's a lot of stuff that's offered to you in WEBULL. We used the financial tab to fill out our DCF. We also took a look at the analysts and what they're saying for PayPal. There are 50 analyst ratings in this stock right now. The low price is $175, which is kind of close to where we're at right now at $193, and the high end is $366. Now, earnings for this stock was on November 8th, and since earnings, a lot of analysts have kept a buy, an outperform, or an overweight rating for PayPal, which is bullish. If we take a look at the analysts from November 8th and on, we can see that most of them are bullish, except for this one. This is an underperform. This is a bearish analyst rating. And also we had one more, which was from outperform to market perform. And we also have this hold right here. But anyways, as you can see, from November 8th on, a lot of analysts reiterated a good rating for the stock. The vast majority of them consider it a buy or an outperform or an overweight rating in this stock. Now, when we take a look at the DCF, and a link will be included in the Patreon if you want to check this out for yourself, all the key data was filled out through WEBULL or Yahoo Finance. Either one does the job. But what's really important here, because we're not doing a true DCF, is revenue growth. Now, in the most recent earnings, guidance was 18% in revenue growth. So that's why we're using that number for 2021. But after that, this is what I'm assuming is going to happen. I think that 2022 is going to be a really good year for PayPal, and we're going to see some nice growth. I also believe that growth is going to sustain itself in 2023, and then in 2024, you're going to see it tailor off a little bit. The main reason why I believe that we're going to see nice growth, well, there's two reasons, but one of the big reasons is Pay with Venmo on Amazon. Venmo is owned by PayPal. And if you don't know the business structure of PayPal, PayPal gets paid through the transactions that they facilitate. So all the transactions that are facilitated on PayPal, they'll take a cut. Then on Venmo as well, for businesses, they will also take a cut. They don't take a cut for peer-to-peer. So essentially, the more transactions that are utilized through PayPal or Venmo, that's going to improve the top line for PayPal. Another thing that's bullish for PayPal and will help with growth is inflation. As goods and services increase in price because of inflation, PayPal is going to take a larger cut because the way that they get paid is just a flat fee of the transaction price. Now, I have 23% revenue growth in 2022 because of that inclusion of Venmo in Amazon. I also believe when you take a look at this company and the revenues that they have, when you exclude eBay, we're seeing nice growth. Quarter 3 of 2019 was 23%, 2020 was 26%, 2021 was 25%. Now, this is probably going to be the last earnings report where we see the impact of eBay. And that has been a drag on total revenue. But now that we're getting out of that situation, revenue should start to pick up better on a year-over-year, quarter-over-quarter growth basis. So these growth rates, these are my assumptions. You can assume something different, plug it into the spreadsheet, and see what price target you're going to get for PayPal. But based off my assumptions at 23% in 2022, 22% in 2023, and 20% in 2024, these are the revenue numbers you're going to get. In 2022, you're looking at $31.2 billion in full year revenue. In 2023, $38.1 billion, and in 2024, $45.7 billion. The revenue that we're estimating for a fiscal year is basically the foundation, the cornerstone of our projections and our price targets. The reason being is we're using a price to sales multiple approach. And what that means is you're just taking market cap divided by annual revenue. And if you take a look at Seeking Alpha and you look at the PayPal 5-year average, the price to sales multiple, the 5-year average is 8.63. And when we take a look at the company on Yahoo Finance and we take a look at the price to sales multiple in September, in June, in March, in December, and September again, the quarterly price to sales multiple, we can see that we had values anywhere from 12.16 to a high of 15.15. So my base case is the 5-year average at 9, my high case is 12, and my low case is below 9, I use 7. Which essentially would be close to a 25% discount off of the base case. And based off of this approach, you can see that the price targets are pretty nice. The base case in a year's time gives you a 51% return on investment. The high case would be doubling your money at close to 100%. Now, as you can see by my analysis, I am bullish in PayPal, but there are risks associated and I could be wrong in my analysis. The risks that I see with PayPal are the technicals are still bearish, so there is still downside from a technical perspective. In addition to that, there's also risk that other companies start taking market share away from PayPal. The biggest name that's getting the most attention right now on Wall Street is Affirm. But in my personal opinion, Affirm on Amazon isn't a huge competitor to PayPal because I think a lot of the goods and services that are bought on Amazon are cheaper products that people are okay just buying at full price right now. They don't need to buy a toothbrush or a mattress set over multiple payments. They can just pay for it right now using other forms of method, maybe even Venmo. That would be the goal. Another risk with PayPal are regulatory pressures for Venmo. Because this is an app that has so many users, some people are abusing it so they don't pay taxes. And the media is portraying the regulations like it's going to destroy Venmo, which is far from the case. If you read the language that's proposed, it's only going to tax businesses. It's not going to tax the peer-to-peer transactions. So if you were to give your friend $600 for rent, you're not going to have to report that, and that's not going to be taxed. If you have a garage sale and you sell a bunch of stuff and you make $2,000 off of that garage sale, you're not going to be taxed on it because it's not a business. These are products that you bought in the past. You bought them, you paid a sales tax, and now you're getting rid of them. You're not making money off of them because more likely than not, you paid more for all of those goods when you bought them new or whenever you got them. So you're not going to get taxed on that either. So the peer-to-peer transactions are going to remain untaxed. At least that's the way that I'm reading it. We'll see what actually happens down the road, but the media is definitely portraying these regulations like they're going to hurt Venmo by a lot, and they're going to be taking money from basically everyone, which I don't believe is going to be the case. Alright, mi gente, that wraps it up for this video. I thank you so much for your time. It's been real, it's been fun, it's been real fun. Please consider joining the Patreon, hit that subscribe button, ring that bell, and smash that like button. I will catch you all on the next video. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya!